Hey, hi friends, welcome to my channel Dr. Stock. I hope you are doing well and everything is going great. So, welcome to part 2 of the series on the basics of stock market. I hope from part 1 you were pretty convinced that investing in equity market can gives you really high rate of return. But the challenge remains the same, that how do you make sure if your investment is going to be safe when you invest in equity or stocks? In this part, we will understand what are the financial intermediaries and regulators in India that are present to make sure that your investment is safe anytime during the process. So, as you see, this is part 2 of the series where we'll be understanding about the regulators and financial intermediaries. If you have not, please check out the video number 1 to understand why you should invest in stock market. Let's start. So, before we proceed to understand about the stock market, let's understand what exactly is a stock. Sadhguru defines that stock market is a place where you go to invest in others' business. It is because you think they can do better business than you can do, and you have a high confidence in their ability, and thus you bet your life savings onto someone else's visions. Now, these are not the exact words of Sadhguru, but this is what I remember in from one of his talks. So every company makes a slice of part of its overall business into smaller pieces which are known as shares. Now, these shares can be held by the promoter company, that is the person who is owning that company, or could be the people who has invested into that business. And then when the company goes to public, you are given out some portion of it in the form of stocks when you invest into that company. So ideally it is an exchange of your money to getting that stocks, and you are being called as an investor into that company. Now we are actually very small owners of that company, because if a company has 10,000 crore shares, or maybe 1,000 crore shares, then you would be holding like some thousands or 10,000 at max, which gives a very small percentage compared to what the promoters have, maybe some 5 crores of shares or 3 crores of shares. So that makes us the marginal investors into those companies. We have a complete dedicated series on the stock market and stock exchange and what is it. So we will talk more on that in that part. So what is a stock market? A stock market is a collection of shares in various companies that can be bought and sold in electronic form over stock exchange through a stockbroker. So I will explain you these terms, what does a stock exchange or a stockbroker means, but this is what a stock market is. So let's understand who should invest in a stock market. So there are many people who tend to invest in a stock market. These are the retail investors like you and me. There will be domestic institutions like LIC of India or maybe banks who actually invest in a little larger chunks. Then there are domestic AMCs. AMCs are called as asset management companies, which runs mutual fund companies, where also you tend to invest but in an indirect mode, where all the investments are taken care by the AMCs or the mutual fund companies, that where to invest, whom to invest, so that they can give you good return. Then there could be NRIs or other Indian origin investors who could invest in the stock market, and then there are foreign investors. The sole aim of everyone is to make money from the stock market. And do remember that your loss is my profit and vice versa is a common thing that runs in the stock market. Now, you might ask that if everyone wants to make money, then lot of psychological things like fear and greed comes into play, which may lead to unfair practices. So, to avoid this, we have regulators in India to control it. Now, who are regulators? So, a regulator agency is a public authority or government agency responsible for exercising autonomous authorities over some area of human activity in a regulatory or supervision capacity. So, what does a regulator do? So a regulator is actually responsible to make sure that everything is being followed with proper care and there are no unfair practices in this environment. So for stock market in India, Government of India has made SEBI, the Securities and Exchange Board of India, which regulates the stock market in India. Now, what are its main functions? So, main functions are to promote stock exchange development, to regulate the activities of market participants in stock exchange, and to protect the interest of investors from any fluctuations in the market. So, this is what the major functions of SEBI to make sure that the business runs smoothly on a stock exchange. Now, there are two stock exchange in India that I would like to talk about now so that you understand. So there are close to 21, 25 stock exchanges in India, but two major stock exchange in India are BSE and NSE, which conducts their business fairly and they have to be compliant with the SEBI rules. So SEBI has prescribed a lot of set of rules and regulations to all the legal entities involved in the operation of stock market. Now, let's look at what are those legal entities that are controlled by SEBI. Now, you have two options to invest. Either you can go for a PMS or an AMC, looking at how big you are. So, PMS are actually the portfolio management services where they work similar to a mutual fund, except that in a PMS, you have to invest a minimum of 25 lakhs, whereas there is no such cap in a mutual fund. So what is a mutual fund actually? So AMC is what we offers mutual funds. So AMC, as I mentioned, is an asset management companies. They collect money from public in small chunks and they put that money in a single account and then invest on your behalf, and that money in market with an objective of making that investment grow and thereby guaranteeing wealth to its investors. So this is one way that you can invest in stock market. Another way is that you invest directly. So there you have to first get in touch with a broker. Now, stock brokers, they buy or sell share from a stock exchange on your behalf. So you are not allowed to interact directly through stock market. It will have your bank, that the amount will be debited from your bank and it will go to the broker's account, and that broker's account you can access it with that capital that you have invested there to buy and sell share from the stock market. Now broker are there only to execute what you say. So they are actually kind of an intermediary between stock market and you, and they will execute as per your wishes. So before depositories, before it came as an electronic form, people used to receive shares in a paper form. Depository hold your shares and facilitate exchange on your securities. When you buy shares, these shares sits in your depository account, usually referred to as a demat account. So that demat account you can open with any broker. So people can have many broker accounts. Let's say you can have in ICICI, you can have in Zerodha, you can have in a maybe Kotak Mahindra, and then once you link your depository account, your demat account with that broker, all those shares will start getting reflected with your broker, and this is maintained electronically by one or two companies based on exchange. So NSDL is maintained by NSE and CSDL is maintained by BSE. Now let's look at what is a depository participant is. Now most of the banks and few stockbrokers are called as depository participants. They act as an agent for the two depositories that I just talked about, the NSDL and CSDL. So again, I would like to spend a couple of minutes on the stockbroker if it's not clear to you. So stockbroker is a gateway to stock exchange, and you need to have a trading account with your stockbroker. Stockbroker need to follow SEBI guidelines in India while opening the trading account. Stockbrokers can be a dealer whom you visit in your office or have on a telephone call or you can do it yourself over an internet. Now these stockbrokers charge a very small commission called as brokerage in return of these services, like providing you margin or support or help on a requirement or investment or facilitating fund transfer to and from your bank. So for all these services, stockbroker charges a very small amount known as brokerage. that a depository is a financial intermediary which offers a service of a demat account. A demat account in your name will all have the shares in the electronic form. Now you're not supposed to again interact, or no broker are supposed to interact with depository directly. So that's why they need to have a demat account in a form of depository participants, which either a bank or it could be a a broker itself doing it, taking this responsibility in itself. Now what does your bank do? So your bank is actually helps in facilitating the fund transfer from a bank account to your trading account. Now you can link multiple bank accounts to your broker. Depending on what broker you choose, you can actually link from 5 to 15 bank accounts to your broker. Now you have understood correctly, there will be three accounts that you need to have a link with. So one needs to be your bank account where you will transfer your funds to buy and sell stocks. The second would be a trading account with your broker, which will use those funds to interact with in stock market to buy and sell stocks on your behalf. And third is a demat account, which will be saving your those stocks into depositories. So I hope you have understood a little bit on how each function works and how it is controlled. I hope you understood a little bit on the regulator in India, and in the third part we will understand the process of IPO and is it really a good thing to invest in IPO or not. Thanks for watching.